Hey guys, what's up, how's it going? My name is Rob and welcome back to another video on the channel. In today's video, I'm going to be showing you guys what Canadian stocks I'm going to be adding inside my dividend portfolio today. So in today's video, I'll give you guys a quick little update on how the portfolio is doing. I'll show you guys what stocks I'm buying, and then I'll give you guys an update on how much dividend income in total we made inside this portfolio. So before we get started, I just want to ask you guys to do me a big favor. Be sure to smash that like button and subscribe to the channel if you guys want to follow aside with me as I do this video. And I also want to mention really quickly, if we get 100 likes on this video, I will give you guys an apartment tour and show you guys the apartment that I live in and give you guys some tips on how you can cut your expenses when you're looking for a place to live and whatnot. So if you guys want to see that video, smash the like button. If we get 100 likes, I'll do that video sometime this weekend. All right, let's jump inside the portfolio and let's see how our stocks are doing today. All right, guys, what's up? How's it going? We're inside the portfolio, so we'll do a quick little update of the TFSA account before we go into the stocks, and I'll show you guys what stocks I'm going to be buying. So we'll do a quick little update. I'll show you guys a quick little overview of the stocks I have and talk about some stocks that are doing well inside my portfolio, and then I'll show you guys what stocks I'm actually going to be buying for today. So really quickly here, guys, as you guys can see, our total value for our TFSA account is $27,000, and like I mentioned before, we've been building this portfolio back in January of 2020. I've just been documenting my journey here on YouTube and showing you guys is basically how this account has grown over time. So I'll zoom out here a little bit so you guys can see the different amounts. So it's Friday morning here, and it's Thursday morning, sorry. And since Friday the stock market will be closed, on the weekend the stock market will be closed, and on Monday the stock market will be closed, I figure I might as well do a video today because I won't be able to do an update for at least Tuesday till next week in regards to the portfolio and whatnot, because nothing will be changing. So here's a quick little update. So it's 10 a.m. in the morning. The stock market is currently up about $38, which is 0% inside our portfolio. Over the past week, our stocks are up $192, which is 1%. So a little bit of growth coming in the past week. Over the past month, we're up 3%, which is $846 inside the portfolio. Over the past 3 months, lots of growth inside the portfolio. Growing up $2,000, which is 8% the last 3 months. Lots of gains the last 3 months. If you go over the past year, you guys can see here that we're up 12%, almost $3,000 inside the portfolio, give or take. It seems to hover around 3% for the past couple weeks or so. And all time, the stock portfolio is up 11%, which is $2,705 inside the TFSA. So overall, pretty good growth, pretty good gains overall, and I'm pretty happy with how this account has been performing in regards to our Canadian dividend stocks. Here's a quick little update on the holdings inside of our account. I'll go through this really quickly here. I have $241 to trade today, so I'm going to be buying 2 stocks today. But before we do that, I'll just do a quick little update so you guys can see what I currently hold and how they're performing. So the first stock we have is AQN, which is Algonquin Power and Utilities, currently down 4% inside the portfolio. We recently bought Alimentation Couche-Tard, which is a cool little convenience store-based stock based out of Canada. That is down 1.59%. We have Brookfield Infrastructure Partners, which is up 3%. We have CNR, which is up 6%, doing not too shabby. We have a couple shares of that. We have Enbridge, of course, which has actually been performing quite well, up 11.55%. I don't have a lot of shares of Enbridge because I do hold it inside my main ETFs, so we just bought a couple shares back in the day, and we can see it's actually growing quite a bit. So anybody who's been buying Enbridge throughout 2020 and 2021 is probably doing pretty good right now in that regard. Next up we have is Fortis, which is like a nice defensive-based utility stock, currently up 4% inside a portfolio. And then we go down here, we have some REITs. So we have H&R REIT, which is up 3.76%. We have one of my best performing stocks, which is Manulife, up 21.6% inside the portfolio. We've been buying this steady throughout the year, and it's just been performing really, really well. Then we have RioCan up 8%, TransAlta Renewables up 20%. Who would have guessed, but I mean, renewable energy has just been doing really well. Severia Corp up 12.46%, so pretty good gains. Shaw Communication just did its crazy thing. So somebody mentioned in a previous video that Rogers has not actually officially bought Shaw yet, but they're kind of in the works, so obviously that shut up the stock, but we're sitting at a 40% gain for Shaw. We bought Shaw way back in I think it was early 2020, and we kind of I bought a couple shares and never did anything since, and now it's up 40%, so kind of just funny how that works. TELUS is kind of at 0% right now, so they're kind of going up and down, kind of just being neutral, I guess. TD is up almost 20%, has been a really good stock for me, one of my favorite stocks. And then we have some ETFs going towards the bottom. We have VDY, which is up 12%, which is a Canadian-based fund. And then we have VFE, which is a US S&P 500, which is traded in Canadian dollars, up 4%. So we've been regularly kind of buying that as time has been going on. And US stocks have taken a big of a hit lately, while Canadian stocks, as you guys can see, have been performing quite well inside our portfolio. So overall, most of our stocks are up, with just a couple kind of trending downwards. And in today's video, we're going to be focusing on the stocks that are actually in the negative. So the two main stocks I'm going to be buying today, and we're going to focus this video because I did a video, the previous video I did on this channel, which you guys can check out if you want, was a video that talked about the best earning stocks inside my portfolio and my worst performing stocks. And my worst performing stock was AQN, which is Algonquin Power and Utilities. And this stock is by no means a bad stock, and I want to illustrate today by buying it why I think so. So Algonquin Power and Utilities is a fast growth based utility company based out of Canada. They focus on all types of energy like pipelines, energy, renewable energy. They kind of have a little bit of everything, and they're a very fast growing company in terms of growth, stock appreciation, as well as dividend income. So they fit that kind of perfect balance that I kind of shoot for. I shoot for stocks that have lots of growth, lots of dividend income, and lots of good dividend growth as well. So if you look over the past 5 years, Algonquin Power and Utilities is up 84%. So tons of gains, really fast growing company. And if you look at its previous history, you'll see just this trending line up because it's just a really good growth based Canadian stock. This stock took a bit of a hit. There was apparently a storm happened in Texas, took out a lot of their revenue and whatnot, and they suffered some pretty big losses. So that kind of pushed the stock down temporarily. Now, I think this company will recover, and even though this stock is kind of like my worst performing stock with quotations right now, I still think it's kind of represents a good time to buy the stock because it went down a lot, it's priced low, and we can take advantage of it, the fact that it's probably going to grow in the future. So I just want to show you guys, even though a stock might not be performing the best inside your portfolio, doesn't necessarily mean it's a bad stock or it's not worth buying. And in today's video, like I said, I want to kind of like showcase you guys why this is, and I'm going to buy about $100 or so worth of Algonquin Power and Utilities. I'll put that order through here, but just some information here. It's got a current yield of 5%, so you'll also lock in a really nice yield. And Algonquin Power and Utilities currently represents about 3% of my portfolio, and we are currently down about 4%. So a little bit in the negative, but honestly, guys, at the end of the day, I think the stock definitely has a lot of potential, and I think this is really undervalued right now. Even though they're facing a little bit of hardship, I think they will recover and do well. So put that order through. Buy 5 shares of Algonquin Power and Utilities, and now let's talk about the other stock I'm going to be buying today. Alright, so the second stock we're going to talk about today, we have $141 left to buy today, and the second stock we're going to be talking about is going to be a stock that's kind of pushed down, but even though it's performing pretty well inside our portfolio, and that is RioCan. So RioCan is one of Canadian's biggest REITs, and I see this stock has been pushed down quite a bit because if you guys follow my channel, I've been kind of talking about this on a regular basis, how RioCan is up. Has been pushed down since the pandemic, right? The pandemic happened in March. We've seen a big drop for pretty much all REITs, all stocks in general. Most Canadian stocks have kind of recovered pretty much to the point where it's at the same level. But some of these REITs have really took a big hit because real estate and the shutdowns and whatnot have just been going back and forth. So it's been kind of weird. But these stocks took a big hit, and we've seen some recovery here. Over the past year, RioCan is up 30%. So if you bought RioCan, which we've kind of been doing, you should be doing quite well with the company. And I think the company still has a lot of room to growth. I think it's going to grow over the next couple of years, and it's just a really good company. So it's a really good REIT. It's got a lot of growth potential in the future, and it's got a pretty good dividend yield. RioCan currently has a dividend yield of about 7% right now. This might not be 100% accurate. So don't quote me on that. You might have to check that into Google or something like that. It might be closer to 6 to 7%. I'm not too sure, but double check that because sometimes it's not 100% accurate in Wealth Simple Trade. But nonetheless, because we've been buying throughout the dip, this stock is doing quite well. Even though it's got a little bit of growth, without 7% gain with RioCan, which is $145. We own 104 shares, which is quite a bit inside a portfolio. But I do like the monthly income, and I do think this stock is going to grow. And this is kind of more of a riskier buy, but I do believe that it's going to do well. So we'll put the rest of our money in RioCan, and that's going to be the stocks I'm going to be buying today. So we'll put about 7 shares of RioCan we're going to buy, and I think that's looks like I need to refresh the page here. So I'm just going to refresh really quickly. Looks like it, for some reason, there we go. So now we can put that through. 135. Looks like we're going to have to do a limit buy. I'm just going to buy 6 shares to make sure it goes through. It is early in the morning, so I just want to make sure it actually goes through here. So we'll buy 6 shares of RioCan, which leaves us with $24 left. So that's pretty much all the stocks I'm buying in today's video. So let's take a peek at the dividend income, and let's see how our dividend income has been growing over the past little while. So if you guys are brand new to dividend investing, or you're brand new to using Wealth Simple Trade, the cool thing I like about Wealth Simple Trade is it's very easy to track your dividend payments that you get from companies, and we predominantly invest into dividend-based stocks. So pretty much all my stocks I buy pay some sort of dividend. They're either a company that's been paying dividends for a long time, they have a good dividend yield, or they're a company that has really good dividend growth. We're kind of focusing on both those two things. So we can sort by our TFSA, and I'm going to go into our dividends here, and we can see all the recent dividend payments inside our account, and I'll show you guys all the dividend payments we've got over the past couple days, because the past couple days we've gotten quite a few dividend payments, as you guys can see. And then I'll show you guys my spreadsheet where I keep track of the monthly income we've been growing inside of our account since we first started investing. So we'll do that just after this. But here's the dividends I got over the past couple days. So we have a dividend from TransAlta Renewables, XRE, BIP, which is Brookfield and Infrastructure Partners, CNR, which is a really good stock. We have Canadian National Pacific Railway, $1.85. We have Shaw Communications, pays a dividend of $1. VYMI, which is one of our random ETFs we bought way back in the day, pays us a dividend of $1. Manulife paid us $11. Spheria Corp, 72 cents, and then VDY and some other ones that happened towards the beginning of the month. So lots of dividend payments coming over the past couple days, and like usual, guys, we're just taking that money and reinvesting it back inside the portfolio to keep those dividends growing and getting that compound interest keep doing its thing. Alright, and just to close up the video really quickly, guys, here's the dividend income from the portfolio over time. I like to always do this to give you guys a quick little update how the monthly income has been going. So basically what I've been doing is every single month since we started the portfolio in January 2020, I've been adding the dividends and kind of keeping track of them on a monthly basis. So we have 44 cents here for the first month, you know, really just pennies that we made inside our portfolio. It got up to a couple dollars, and you can just see the income growing over time, which has been really cool. And in March, we hit an all-time high on dividends of $69. Nice. Inside of our portfolio for the month of March. So quite a big growth from February. February we made $49, almost $50, and now we're at almost $70 inside our portfolio. March was a really good month for dividends, but as you guys can see, it is starting to grow, and we're starting to get that money, and we're just reinvesting that money and putting it back into stocks to get more dividends, to get more stock appreciation. And here's just a quick little update for you guys from my dividend investing journey. Here's a couple things I bought with my dividends for this month. This is a game of Uno. We bought some Uno cards. We could play it. That was $2.47. Next up we have is this potato masher. We need a potato masher, so I bought one. It was $3.98. Actually pretty good quality for the price. This is all stainless steel, by the way, so this is good stuff. And then we bought a spatula because you need a spatula for cooking, and it's pretty essential for cooking, really. And this was about $6. A little bit expensive, but once again, pretty good quality. So I went with that. So once again, guys, hope you guys enjoyed this video. Let me know what you guys think in the comments, and I'll see you guys later.